Hey, I'm Dr. Lance Knob with Denali Consulting and 4% Breakthrough Communities. And I'm here today with my good friend Amit Gaglani, owner of AG Management Consulting and head of growth at Accountable Equity. Amit, listen, we're going to tear into so much good stuff. Firstly, I want to ask you, how does someone successfully transition from being a physical therapist to creating their own investment fund with a boutique private equity company, right? I know changing professionally and creating the professional role of your dreams is not easy. How'd you do it?
Well, Lance, it was really simple. It just kind of fell in my feet, and it all was beautiful, and it just everything was smooth sailing, and there was no bumps in the road, and it just kind of happened so easily. Yeah, I wish that were the case. Nothing worth it ever is that easy.
For
So,
sure.
as you and I both went to PT school together and graduated and started on our journeys, we worked really hard and tried to be the best professional that we could be. Myself, I was really passionate about orthopedics and I wanted to be an orthopedic board certified specialist. So I achieved that and I really wanted to help more people. So I did everything I could to become the best I could be at that. Then I guess somebody started noticing that I was pretty good at, handling myself, and maybe it was good challenge to handle others. So they gave me the opportunity to run an office for them. And I took that opportunity and I did it again for them. And then somebody gave me the opportunity to read Rich Dad Poor Dad. And that bit me. And then I read E-Myth, and then I was like, oh my God, it's like watching the movie The Matrix. Once you take that pill, you just can't go back. You cannot see what you can't unsee what you've seen. So then, led my life to physical therapy, and then I started opening. I had my own practice, and quickly realized I didn't know what I was doing in private practice, and had to get educated on becoming a business owner, and then started really just scaling that. And I scaled it, and year after year I went from one office to two offices to three offices, then to four offices. And people started noticing. Other companies, other physical therapies companies started noticing, especially since I had a niche in a certain area. And it's kind of hard to penetrate when you have a niche and you've established yourself in a marketplace and doctors know you and people know you in that area. So they thought it was better. Large companies come along, they want to buy you over because it's easier for them to buy you instead of compete against you. Same time, private equity was kind of realizing like how strong healthcare is and the dynamics of healthcare in the marketplace. So that was great. So I had opportunities with for to sell to private practice or for in private equity. And I decided to just educate myself on how they value physical therapy companies, on the metrics and the numbers. And once I found out how a bunch of companies did it, I just went to work for the next 2 years in building the highest value I could for those companies. So when I do choose to 10x myself and partner with a larger entity, I have the best metrics possible to have the best buyout. And that's kind of what I did. You know, I found a good private equity company that was hungry, that wanted to get into this vertical because they had nothing else in healthcare. And it put me at a good position because I was one of the first that got in. And then from there, we just kept growing. And I owned a certain percentage of the parent company. We kept growing to a national level. And then another private equity looked at what we were doing and said, you know what, we want to buy you over. That's when they took me and they said, you know what, we're buying the rest of your shares. And, so that was that. And then actually, something you do and you help people with every day actually came in very helpful. And that's why a good business coach is really integral. But you had me sit down and write down, what am I good at? What are my passions? What do I want to do? Now that I've accomplished my goal of building and selling my practice, what are you going to do now with your time? You're too young to not do anything. What are your passions that you enjoy? And as you know, I've liked real estate stuff, and I've liked syndications, and I liked bringing people together and then being able to negotiate better deals on our behalf with the syndicators and get us better pref rates and better everything on the waterfall, whatever I could do. It was something I was passionate about. And honestly, that's what led to the boutique private equity taking notice, because I was investing in them for several years, bringing investors to them, just because I liked what they were doing. And that's when they approached me and said, you know what, we want to put you in a position on the leadership team here.
So
That's
what?
what got me, that's what connected the dots.
I love it. So many questions, rise up from this and so much good stuff. Really what passions and skills, did you need to, grow your business and also to make this partnership, and who did you partner with? And most importantly, how does somebody else, some of our listeners, how do they make this transition from, the doldrums of, maybe a W-2 or a job, or even just being kind of a slave to their business, even if they are already a business owner? How can they power through some of these things?
Well, my first thing was I wanted to be really good at what I was doing. And mind you, at the time, I was super passionate about physical therapy and I was passionate about helping people. And I'm still passionate about helping people. And, I reference this movie all the time because I think that leads me to where I am right now. I watched this movie called Patch Adams. And if you remember that movie in Patch Adams, it was Robin Williams who starred in it. And he's a physician, trying to make it through. And the line that really got me in that movie was, when he says that, if you treat a disease, you can win or you can lose, but if you treat a person, you will always win. And that kind of stayed with me through physical therapy. I was really more after looking after the individual person as opposed to, hey, their knee injury, and that led me to feel more connected to the patients and vice versa too. Those patients felt more connected to me and they would always want me to help them. Now still with the investing stuff, with what I'm doing as head of growth, it's the same mindset, really. I'm just looking after the individual. What can I do right by you? It's not about how much are you investing with us. Where am I going to put it? It's more or less, what are your goals, and let me help you achieve them. After, when all's said and done, I want investors investing with us because they're going to scream from the rooftop saying how happy and satisfied they are with our investment community and what we're doing, and they want to refer other people to us. So I think if I just keep doing what I'm doing and look out for the individual investors, I think that's the right mindset for me. And I think anybody trying to get into anything, if they have that mindset, like do right by others, and you'll be fine. I think just be the best that you can be at what you are, and things will start to materialize for you, and opportunities. And listen to podcasts and get a business coach too. That helps along the way.
Yeah, for sure. So yeah, anybody listening live, feel free to drop any questions in the comment box. I think they'll all flow in from all the different sources. Dave Kittle, thanks for joining us. I think Dave Margolis is with us. Anybody else? Good to see you. So Amit, yeah, I mean, I love the personal development. I love the Patch Adams story. Um, tell us some of the biggest challenges and biggest failures that, you had to, get through to on all these different milestones to get where you are now.
Yeah, it just reminds me of how far somebody has come, because when I first started my private practice, I really didn't know any better, to be honest with you. I made so many mistakes hiring people, hiring the wrong people, really hiring a lot of wrong people. I had a person that sat at my front desk that was opening the paycheck of other people and then telling them what they weren't making. And that caused a whole bunch of problems. As you can imagine, you get multiple employees coming up to you saying, why am I only making this? And you're like, oh my God, you're just starting off trying to figure things out. That didn't end well for that person. Let's put it that way. And then I started getting better at it. And as I was taking more courses and understanding more team building and things like that, I was able to spot, people. But, it's not always easy. It's not like you learn something and all of a sudden you don't make those mistakes. You still continue to make mistakes. I had employees that, stole money from me, large sums of money. And it was because I was in such a fast growing phase that I couldn't stay on top of every single area of my business. And I only then later, when I realized, I was like, wow, this much money has been missing, but it was taken out in small periods or small amounts over a long period of time, that I realized that, these are the things, these are the pitfalls of growing really fast. It hurts though. It definitely
Oh
hurts.
yeah.
And it makes you question things a lot.
And that's very common in medicine and healthcare practices. We really are, generally speaking, pretty terrible at managing accounts receivable and some of the financial systems and processes.
Here you are trying to make money in one area and you're losing it on another area and you don't even realize it. And you're like, oh boy. Later you catch all this stuff and you're like, okay, now I got to put another system in place to stop that from happening. But so these are the mistakes that that you learn, and marketing things that you learn. And there's a lot of growth, but there's and a lot of opportunity, but there's a lot of things that you can do wrong as well. But to be honest with you, if I didn't do some of those things wrong, I would not have made it to the other end of it, because those mistakes actually helped you to become a better practitioner or a better business owner in a lot of respects.
For sure. I mean, that's the mindset I'm trying to adopt, right? All these hard things, they happen for a reason, right? Gap in the gain, Dan Sullivan mentality, Benjamin Hardy. We really need to develop those skills. So it's a positive, it's a good thing. Oh, it's not easy at the time for sure, but it's definitely the only way you develop.
Yeah, yeah, I definitely agree. Yeah. So many things, so many life lessons you learn because you actually had to push yourself into uncomfortable areas and do things that you weren't really, you didn't know what you were exactly doing at the time. When you get out of it on the other end, you're like, okay, well, next time I have to do this, I know what to do.
Yeah. So any other stories you want to share about, pain points, problems, challenges along the way?
I mean, there were so many challenges all the time. I chose a company in Florida to help me become a CEO of my company. In order to do that, I would literally have to hire somebody to watch my patients. And every time you're going away, as you know, patients get attached to us, right? So they don't want to see anybody else. So you're basically paying somebody a lot of money to not really see that many people. One time I was in Florida taking my courses, and I get a phone call from my front desk, and it's like, "Oh, the therapist that you hired is sleeping in the back." And I'm like, "Sleeping?" They're like, "Yeah, they called all the patients and canceled them so they could take a nap." I'm like,
Nice.
I mean, you don't. There's no words. Like you have no words coming out of you. You're like, what?
You can't make this stuff up for
No,
sure.
you can't make some of this stuff up that happens. So yes,
Yeah,
I had
no.
one of my patients that drove through the front door, drove through the whole front door because unfortunately she got confused. Instead of hitting the reverse, she hit drive, and she rode through the front door. And I was like, oh boy, that there there goes that day.
Okay. Okay. And did you continue to treat that day? Were you able to make it happen?
We tried to, we had to get the car out, but after we got the car out, we fixed the door a little bit. Yes, we tried. The
Oh
patients
yeah.
that came after that just didn't have any idea what happened. They're like, what happened over here?
They had more natural light and fresh air coming in, but you certainly probably
Oh
kept
boy.
rehab going that day.
Yes, yes, and yeah. It's funny, on the days that you've actually lost electricity, you're like, okay, no treadmill, but there's natural light coming in. So some of these bicycles are naturally powered. So patients got to power them. They got to get on there. You
Oh
know,
yeah.
your shoulder, your legs don't care that the electricity went out. They need the rehab. So we got to get it done.
Well, it's so nice to see you thriving in all these ways, and you and I have known each other for a long time since we met studying physical therapy in Aberdeen, Scotland in 1996.
Whew.
And, we've traveled the world together and done a lot of cool things. So,
We had some great opportunities, while being over there to different rotations. I remember going to visit you down in what was that, York? No, 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 Newcastle.
Newcastle. Oh, yeah.
Yeah, Newcastle. That was fun going down in Newcastle, England. It was chilly out, but yeah, we had a good time,
Oh, yeah.
traveling around and going to different rotations around the different countries, just staying in touch with your classmates and seeing castles. Boy, did we see a lot of castles and distilleries. We
Oh,
had a
yeah. Well,
we had
Newcastle, is ranked one of the top
ale.
party spots in the world. So we had to check that out from,
Yes.
make sure that that was accurate, and it was. And yeah, we've seen some beautiful places in the Highlands and tried lots of whiskey and scotch, and it was all good. So yeah, glad that we're still friends and doing a lot of things with GoBundance. And I'm wearing your swag right now with
Nice.
Accountable Equity, and the McCallens are amazing people. I'm so glad that you're connected with Josh, and obviously he's part of GoBundance, so we see each other regularly.
Yes, yes. Actually, that's how well, no, technically I met Josh through you. You want to tell that story? I think you may even know the details better than I do.
Well, yeah, I mean, I can remember hearing Josh on the Family Office podcast and telling you about that because I had heard Richard C. Wilson on, one of my favorite people and mentors, on John Lee Dumas's Entrepreneurs on Fire, and was checking him out. And then I heard Josh presenting his investing opportunity with Renault Winery in Egg Harbor Township near the New Jersey shore. And I told you about it. And yeah, tell us what happened from there.
Yeah, so I heard it, and I said, "Wow, this is in New Jersey." Obviously, Josh doesn't know me at the time, so let me just drive down there to the hotel and the winery and everything, and check it out, just as a secret shopper. And when I got down there, people were opening the door for me and saying, "Welcome home." And I thought it was very odd. And I said, "I didn't tell anybody I was coming down here. Why are they doing that?" And then I'm walking in the hallways, and people are saying, "Welcome home." So I really start to understand that this is just their culture. This is the culture that the McCallens have kind of instilled, and they come from a long time of hospitality from Europe, and then they did some great resorts over here in America for a large family office. So they understand hospitality, but that's what they bring to the table, that culture. And as you and I had our own companies, we realized how important culture really is. In my early days, I probably glossed over it, didn't realize how important it was. But later on, I definitely understood that culture is very, very important. And the fact that he had this figured out, and that everybody's opening the doors and doing this on a consistent basis, it made me realize that there's something that they're doing on a consistent basis that teaches this culture. Later I found out more, but that's what initially got me hooked on what they were doing. And they had a beautiful property. Renault has history. From 1855, Louis Renault came over from France, and it's the only winery in the country that's legally allowed to make champagne. The only one in the whole country, because that was he brought it over. He came over in 1855 and he got the license at that time, and now they can't take it away. So we're the only ones that can do it. And there's a beautiful golf course there, as you know, and a winery, and we do tons of weddings, 6 to 13 weddings every weekend at that facility. And
And
then
the
we
other
have other ones
properties,
too.
yeah, sorry to interrupt. And the other properties as well, incredible. I was just in
Yeah.
Annapolis a couple weeks ago for, a wedding myself, and I saw Kent Island across the water, and I can't wait to check that out. But and now Sea Oaks, Country Club is
LBI
now
National. Yeah.
LBI National. So you guys are continuing to add to your portfolio. But I guess tell us the background and story on how you created AG Management Consulting, and then how you, specifically became head of growth with Accountable Equity, and what your role is.
Yeah. So, being an entrepreneur, you look at things a little bit differently. You look at things and opportunities and say, okay, well, I want to go down this avenue of investing and creating opportunities and creating funds and being involved in that space. So I took that as an opportunity to create my own company. I created AG Management Consulting, and my largest client is Accountable Equity. And for Accountable Equity, I am their head of growth. So my responsibility directly is really just helping to grow and scale the company, whether that's investor, trying to increase the investor community, which I'm, actively doing all the time. Me and another part of our team is handling that. And then also looking at different assets that we can grow into and creating funds and just opportunities for us to grow Accountable Equity. Right now we are a redeveloper of properties, and we have a niche in the hospitality area. But because we consider ourselves a boutique private equity, we're brought opportunities all the time, and we would love to be able to partner and do joint ventures with um, whether that's apartments in multifamily, whether that's other ventures too. We're looking at a lot of stuff. Right now our roots were redeveloping these properties, but we see tremendous opportunity out there, especially with what we see ahead coming up. And especially in 2023, we're kind of positioning ourselves in a place that we can take advantage of a lot of opportunities and get things at a good price. So, we see that there's changes happening in the market. Everybody sees them right now. We're just positioning ourselves to be able to benefit our investor community in it. So,
Yeah, I want to talk more about the current times. Everyone's anxious and
yeah.
nervous, and just Dave Kittle, who a physical therapist, very entrepreneurial, asked if you sold two PT businesses. So Dave and Amit, you can add
Yeah, sure.
commentary to this, but he actually, Amit explained to me they call it two bites of the apple. So
Yeah.
he sold part of his business once, and then he had ownership in his partnership, and that also sold, which they call recapitalization.
That's right. That's right. I sold 70% of the company back in 2017. And then I went to work with them to help build up the company. And then in 2021, another private equity came along and wanted to buy the rest of the company. Well, I shouldn't say the rest of the company. They wanted to buy the whole entity that we had. And since I owned still 30% at that time, I guess our luck was they wanted to, they overpaid for us. And the reason they overpaid for us is this particular private equity had lost on a couple other deals prior. They didn't want to lose again. So they knew that they were coming in really high. But because they came in there very high, they wanted to buy out all the equity. They didn't want to share any of the profit next time they sell. So they took my profit or they took my percentage and they said, we want to buy you out completely.
So
So
you mentioned earlier that you
that was
studied
the second bite.
valuation, and I think that's important for all small business owners or people thinking about starting a business, getting it right from the beginning. But
Right.
yeah, any additional specific pearls you can share about really getting the most valuation, having the best leverage?
Well, I think we all have learned that you got to do your research before you just jump into something. Something might sound like a great idea, but you got to do your research. And my research led me to know that, in my industry, it was the EBITDA evaluation. They look at your EBITDA, earnings before tax, and other things, basically net profit, if you will, and they do give a multiple on that. Now, there is certain market areas that they'll give a little bit higher for. There's certain things that they'll give it higher for. An owner who's an operator, they may not pay as much, but somebody who's a little bit more removed. So all these little factors that I just wrote down, and I said, okay, well, this is what I need to get to. And that's what I did. So I went to work based on what I had seen. If I had not gone to work and decided, okay, well, this is what I'm seeing, and I had not done that, I probably would not have gotten the value that I wanted to be able to get to. And I would probably still be working there.
So for all the entrepreneurs out there and aspiring entrepreneurs, one thing that really jumps out at me is being an operator is actually going to give you a lower valuation, right? So there's lots of reasons it makes sense to build a great team. In my words, kind of build a freestanding business that can really be operated by your fearless leadership team.
That's right, and companies value that a little bit more because you are not so integral to the operations that if something happens to you, all of a sudden the business stops, and that's the way they look at it. They don't want somebody that's friends with every single physician, and the physicians only want to send to you because you yourself can only see so many patients, and if you decide that you're upset about something, and that's the way they look at it, that this is a loose end. They don't want to buy something with loose ends, just like you wouldn't want to buy something that has a lot of variability to it.
So, Ahmed, let's jump right into this fund that you created. Tell us, about this, what's called a collateralized debt fund and what that means and
Yep.
opportunities for everyone.
So it's kind of crazy if you think about it. I come from healthcare. I'm given an opportunity. Josh McCallan says to me, you know what? We know you. We like you. We know what you're about. You invest personally in multifamily, in self-storage, in oil and gas, and all these different things, and ATMs. Why don't you create your own fund from the best things that you've seen and what you like? And then we'll reverse engineer the math together and we'll figure out how to deliver it. So I've given an opportunity to create my own fund based on how I, as an investor, would want to be treated and how I would want it. So what I had done is I started surveying a couple different investors, and getting an idea of what they would like. And we put it together and we literally launched it, a couple of weeks ago. It's called the Collateralized Debt Fund, CDF. So think of a high yield bank account. It has high yield, anywhere from 6 to 10% interest rate, okay? Has monthly distribution. So on a monthly basis, you're getting money that literally gets sent to your bank account for you to be able to pay bills, do whatever you want. And it has liquidity. Now, that's probably the biggest thing. And I say that because a lot of syndicated deals, you put your money in and you have to wait 3 to 5 years before they can refinance the property and then you can get your money out. In this, you have liquidity, which means if you need the money, you have access to it. You can take money out when you want to. Obviously, if you're getting such a high interest rate, you may not want to, and we want to be able to use the money, as we would on the property, but we're able to give you such a high yield because we're doing things with that money. And you're in a more secure position. So a traditional syndication, you're an LP investor, which means you're on the capital stack, you're a lot lower. But in this, you're considered a creditor because it's a collateralized debt fund. So you're considered the debtor, meaning you're the creditor, which means you're sitting up at a mezzanine debt level position right below the banks. What all of that means is you're in a very secure position. So you're going to get the rates that we're telling you that you're going to get. So that was the opportunity for me to be able to, make an investment. And then we just reverse engineered it to make it work. And the way it actually works is we're using that money to offset hard money lending that we have going on the property. So once again, on our point, it's all about the investor community. We would rather pay the investor community money than a hard money lender. And in this case, it's a cost savings for the property. So the property and all the LP investors become more profitable. So it helps out the property. It helps out the investors on the CDF. It helps out the investors in the LP position. So all around, everybody wins. So it's a win-win-win for all of us.
Yeah, I mean, this is amazing. Nice job setting this up in your first fund. And, I was just explaining it to my wife this morning because, I'm going to invest in it, as you know. And yeah, the liquidity part is especially nice, and certainly the cash flow, right? To have some regular distributions.
Yep.
And also, right, I know you kind of allow us to tribe, so maybe you could explain that to people, anybody that's kind of considering this, what that means.
Yeah, so we have something that's going to be, there's tribe formation. So let's say if you're putting in a certain amount, your friend is putting in a certain amount, you just come to us together and say, look, we have a bunch of friends, we're forming a tribe. Our tribe is the Lance Snob or Denali Consulting Tribe. All right, so guess what? All of your individual investments, we keep them individual, so nobody's money touches each other, but we look at it as one large sum, and we're going to give you the highest interest rate we could possibly give you, because we have anywhere from 6% to 10%. 6% is somebody who's coming in at $10,000. 10% is all the way up to 750. But if you get a couple friends together, some people can aggregate up to $750,000, and therefore they're going to get 10%. That's 10% on their money that they're getting, which is kind of nice. I mean, if you compare these to the bank is giving you 0.02%, for doing this. We're going to give you, even at the low end, 6% is still considered high. So it allows people to get together and to form a tribe and to be able to get the most out of it. So it's great. And the liquidity portion is definitely helpful. The other thing that is great is, let's say you want to hold your money temporarily in the CDF. And then we have an investment that comes along a year from now. you can move that money right over into an equity fund, and there's no issues. So this could be a holding place for you instead of a bank account. So it's great for the investors. They have flexibility too that way.
Love it. So yeah, tell us, what this fund is, how long will it be open, and tell us.
Evergreen. So we never close this one. So it's
Okay.
not like, oh, there's a closing date, because the money comes in when we have developed enough money, enough tranches. We're going to offset that with the hard money lending. So we'll move it in certain tranches. So we have money coming in and coming out. We have money that's going in and out. So when people ask for their money back, we have it available too, and we're able to pay a percentage. Plus, it's a cost savings to the property for us too. So
Well, this is totally innovative and pioneering as far as I can tell. So love what you guys are doing. What's the next fund that you're going to work on now that you got this set up, now that you're getting some momentum?
Well, we're working actually, it's not the next fund per se. It's part of CH3. We're looking at some other properties to add into our existing ones that are kind of synergistic to the Kent Manor one, that kind of feed right into it, and it kind of works hand in hand. At any given time, our funnel is big and we're looking at a lot of opportunities, but the ones that get at the end of the funnel are very short or very small, because there's a lot of due diligence involved. There's a lot of back and forth. We're talking with sellers. There's negotiating. The other great thing, by the way, with the CDF, we can use it for short-term bridge loans when we see opportunities out there. There's tremendous amount of opportunities that are going to be coming up, and we're starting to see them, but some of them require execution really quickly. We don't have the time to sit there and do institutional lending and fill out their 5,000 pages of paperwork and waiting months and months for it. So the nimbleness this provides us gives us the opportunity to close deals quicker and be able to negotiate faster too.
Quick
So
shout out to our friend Chad Beeman. And if anyone wants to jump in on our tribe, Chad and I are kind of spearheading that. So you're welcome to jump in. And the next couple of days, I think we're going to organize that, but we could figure it out later as well. As Amit said, this is not going to end and whatnot. So Amit, yeah, anything that you didn't get to share that you really want to talk about with the economy or what you guys have going on, with AG Management Consulting and Accountable Equity, and even some of the new relationships you're developing with people like Richard C. Wilson?
yeah, so Richard C. Wilson owns a company called the Family Office. He really caters to centimillionaires and billionaire families. So it's great going to these types of conventions and really hearing from higher level thinkers on how they see different things. I mean, it puts you in a whole different mindset. So that's great. As far as the economy goes and what we're doing, we're trying to move things in more of a cash position, so that way we're ready to take advantage of opportunities when we see them. So we're just looking at that. And, the great thing about resorts is we have a lot of levers. We have a lot of opportunities in these resorts to kind of increase cash flow. We have a wine club, we have a golf course. We can play with the daily rates of these things. We can play with the daily rates of our hotel rooms. So, as the economy changes, we can change with it. We're not locked into a dollar amount for charging something. So we have the ability. We do so many weddings, and there's a lot of add-ons. When people come for weddings, they want to do things on property. They want to golf. They want to do things. So we have a lot of levers that we can pull to increase cash flow or to kind of, keep up with things, And as an operator, obviously we have to look at our P's and Q's and make sure that we're, operating efficiently. We're not overstaffed and things like that. So we're constantly looking at things. Being that we have our own hospitality wing, we are the owners and the operators of the property. We don't have a third-party management. We are the ones actually doing it. So it gives us a lot of control over that. So as an investor, you feel good that we're not reliant on a third party to handle things. So it's
Very
exciting.
nice. I love that. And I mean, as you talked about earlier, the culture is just outrageous within the organization. So that could be a whole future episode. We'll have to talk about that a little bit more. But as we're winding down, I guess I know you have some a giveaway that you'd like to share, and definitely let everyone know how they can follow you and get in touch with you.
Yeah. So if anybody is interested, they go to our company's website, accountableequity.com, and they scroll all the way down to the bottom, Josh and Melanie McCallan wrote this book on investing in resorts, and you'll see the levers that we have. You'll see a little bit of history. It's not a very long book. It's a good quick read, but it gives you the nuts and bolts of what you'd want to understand. And then you'll at least start your understanding of why we're so passionate about this industry. But people can follow me on LinkedIn, Amit Gaglani. And they can also, Gaglani at accountableequity.com is my email. So feel free to reach out to me, ask any questions, because we all got to start somewhere when it comes to this path. So that's great.
Very nice. And you're on Instagram as well, and any other platforms?
Mostly just LinkedIn and my email accounts that I'm and Facebook as well. But I'm trying to get better, through through your knowledge and you teaching me about this stuff too. I like connecting with people. How I do it is still I'm learning.
Yeah, well, it's like the blind leading the blind, but all good. Well, thanks, Amit, for sharing your journey and yeah, all their wisdom today. This was amazing. So, Hannah, thank you for helping us behind stage. She's got all these links pasted in our YouTube channel and Denali's Facebook page, and probably on LinkedIn as well. So everyone can be in touch with you, Amit. I know you make yourself available, and
Absolutely.
we'll talk to you soon.
All right. Thanks for the opportunity.
Okay, thanks, Amit.